Hello friends, this is the Cryptonian taking a look at Bitcoin BTC. We see that, well, the market is pretty much flat. It is currently North American East Coast time, early morning Thursday, and let's take a look at what we can see here. Now, taking a look at Bitcoin here, this is a familiar chart. I do have the Fibonacci levels up on the screen. And there's some levels that we need to pay attention to. Now we're still actually holding quite well in this area above 43,000. This is critical to maintain the rally. However, if we do not see some type of move today, Thursday, North American East Coast time, most likely we will then have a flat or negative Friday, and then we could see some type of a pullback down to lower levels. Okay, so what I'll address are the two scenarios, one being bullish and the other being bearish. Now, for the time being, we are holding above the 15-day moving average, which is this white line here. However, that's not guaranteed in the days to come. This blue line, as I did identify earlier, was the neckline of a head and shoulders pattern, a small head and shoulders pattern. This is one shoulder, this is the head area, and then this would be the other shoulder. It's a bit on an incline. And this could see a breakout to the upside, bullish breakout to the upside, if the bulls do push the price upwards and onwards past 45,400. That is basically the break of this blue line here, which is the neckline. However, caution is necessary, because right above it we do have the 46,700, a golden pocket for the bears. Now, you've heard me talk about the golden pocket for pullbacks for the bulls, and bulls like to buy the golden pocket 0.618 Fibonacci level. Well, this is the opposite. It's the golden pocket 618 Fibonacci level for the bears. That price level 46,700, and that is going to be a critical level for the bears to control and push higher and control that above that if they are going to continue upward and onward. In light of what's going on with the stock market and the global situation with the FUD, with Russia and Ukraine, and especially the Fed. The Fed is spooking the markets with, they're talking about trying to tackle this 9 trillion balance sheet that they have. All of this is creating some hesitancy. Okay, so now we currently are still in what we can see is, when I scroll to the left here, it's a downtrend. I mean, we see all the red. We have seen this for 3 months. We know that we've been in a downtrend for quite some time. And in my opinion, this really is not a reversal on the macro level. This is just not even really a convincing higher high, because our previous high here was 44,322, and we did make it as high as 44,800, 44,900, but actually maybe even higher than that. Yeah, 45,500. But we did not hang on to it. We did not have a candle close. We did not close a session above that. And so I do not consider that a higher high. I know some of the other YouTubers, they're excited and they're saying it's a higher high. No, it's not a higher high. It's not a higher high. They failed to control it, and so this, in my opinion, this previous high still stands. We're testing that now. We're trying to control it, but we pushed up, we're rejected, we came back down to 41,600, 700, pushed up again. Now we're having a couple of days of pullback. So this is not a convincing and a solid victory yet for the bulls as far as in this area. So this, like I said, 46,700 will be the area to watch not only do we have that bearish golden pocket where a lot of the bears will start shorting, we do have, when we take a look here, we do have the 200 daily moving average in red. This is significant. 200 daily moving average is difficult psychologically and chart wise, because a lot of the bears are going to be defending that 200 daily moving average, and that 200 daily moving average, as long as the price, Bitcoin price, is under the 200 daily moving average, then this is technically and officially a it's bearish. Okay, so that being said, that's going to be a critical level right here, and it's good to see that the price is starting to try to put in some type of consolidation here, which that may continue, and then another push higher. However, if the patience of the bulls wears thin, we may see, on Friday we may see some type of a significant pullback. Now, the scenario for the bulls is basically a break of the neckline, like I said, and attacking the 46,700 level. The scenario for the bears is to, excuse me, for a bearish outcome is some kind of a pullback. There's a pullback here at 40,638. That's a fib level that we could try to consolidate on, but the Fibonacci golden ratio for this little push higher here for the bulls is going to be 39,177. So if we do fail to consolidate here and go sideways, or if we fail to push higher than the 46,700 and control that price point above the 200 daily moving average, then most likely we'll be pulling back to the 40,638, and then if that does not hold, then the next level is the golden pocket for this little push higher. That's going to be 39,177, and then below that the level is going to be, if that doesn't hold, then all bets are off. Then we're looking at 38,000, or even a double bottom at 33,34 down here in this area. Okay, which that would be an officially a higher low or equal to, and then the bulls could then make another rally pushing higher. And because right now there's a lot of people that are reluctant to buy because it's risky. And why is it risky? Well, because we've had so much buying here recently in these past days, past few weeks, that it's risky. Because if someone takes a position here, especially if you take a large position, and then all of these individuals here, all these buyers here start to sell, whether out of fear, whether out of boredom, whether out of maybe negative news or something like that, then you're going to be trying to get out of your position, and it's going to be damage control. You're going to have to try to get out of your position, and if you have a large position, you're going to be taking heavy losses coming down here. Okay, so that's what we're looking at right now. Basically, we are looking at it's either or. I mean, we don't really know where this is going, and we just have to wait and see. Remember, we're not guessing, we're not predicting. We want to wait for the chart to tell us where it's going to go. That being said, those are your price points. And taking a look at the RSI is at 57, so it's showing some relative strength. It's showing that it does have room to move up, and if we do move up, we're going to be moving up from a position of strength on the RSI, which that's good news for the bulls. And we do have a stochastics. We did cross over to the upside, showing that we're going to have an impulse, and we did have that impulse, but the impulse fell short. Now we're crossing over on the stochastic, showing that we have a potential impulse to the downside coming, and then this RSI here is also sloping down, and so this is not good in the short term. Okay, not good in the short term. This is suggesting that we could have a more probable pull back to 40,638, or even that 39,200 level. A pullback, some significant pullback or consolidation is more so in the cards, more likely than a strong push higher. And that's just what I'm seeing on the charts. That's my opinion when I take a look at the charts. Now our cluster is showing that we're still red, we're overbought, so that's not good. You know, we do sometimes see that push higher, but you know, this shows us that most of the run for this impulse here has taken place. And I would be very surprised if on a Thursday we start breaking out, pushing higher, and trying to capture the 46,700. I just don't believe that's going to happen. I think that we're going to actually have a pullback instead, only because most of the week has already taken place. And usually, you know, when you see the price attack these higher levels, that's usually early in the week. That's usually early or midweek, not on a Thursday or a Friday. Okay, you know, pushing higher and conquering this up here, going to higher highs here and taking control of the 46,700. I just don't see that in 24 hours Thursday, because Fridays are, you know, they're not great. MACD is showing that we are have been pushing higher for a while, but MACD is also showing some type of a pullback here. And if MACD starts to go red and go negative, then you're going to see a lot of selling. A lot of people are going to start selling, leaving their positions. So the best scenario, I think, in my opinion, is going to be some type of consolidation here, creating consolidation at this level, and then from this position next week, pushing higher. Next week or two, pushing higher. That being said, let's wait and see what happens. And again, remember, not investment advice. Taking a look at the altcoins, we do see a lot of them are in the red. They're pulling back. However, it's overnight, so that's understandable, you know. But we've seen altcoins really taking off. Atom still up almost 6%. Near Protocol 2.3%. FTM almost 2%. And you know, these are not significant pullbacks. These are just a few percent, which it's just taking a breather. So altcoins could, if Bitcoin, now this is something that you need to remember, if Bitcoin starts to consolidate sideways, right? Starts to consolidate sideways like this, altcoins are going to explode. Altcoins are going to do really well. But again, probably select altcoins, and only for a brief period of time because of the end of the week. Now we may see some type of low volume push to the upside up here over the weekend. We do see that sometimes, but in my opinion, I just don't think that weekend warriors are enough to take over this 46,700 level that needs to be controlled from the bears. So there you have it, friends. Thank you for your time. I appreciate your viewership. Thanks for watching. If you like the video, please give it a like. It helps out my channel, and it helps other people who are new to crypto find us as well and find this content. So if you appreciate it, if you find it's valuable, then please click like. And we will see you in the next video. Remember, the first rule of investing or trading: do not lose money.